Joining us now is Gabe Borenstein to talk about what Ms. Yellen had to say today. Gabe, sorry for the little rush here. It's
No
moving people in pretty quickly and out. Welcome to the program, by the way.
Thank
I want to
you.
talk
Good
about
to be here
Janet
again.
Yellen, and I want to talk about Greece.
Sure.
Let's start with Janet Yellen and the Fed. What does she say? She says, look at the path and not the date for a potential rate hike. What is she talking about exactly?
I think what Ms. Yellen is trying to indicate to the market is that we all should focus on economic data,
Okay.
which has been on many occasions surprising and certainly defied past Fed's projections. And that will ultimately determine the timing and magnitude of the monetary policy reversal. And basically, the indication is that between now and the year end, without precise timing, the rates could go, meaning Fed funds could go back up by 50 basis points.
Okay, and the path, meaning what is she saying about the incremental increase? Is that what she's saying?
Exactly. She did imply that the increase will be incremental.
I want to combine the Fed and Greece for a moment because
Sure.
some economists were tweeting out that if Greece wasn't in a near collapse and free fall today, that they would have raised interest rates today. Any truth to that, do you think?
I don't think so, because a while ago, the Fed had defined parameters for the monetary policy reversal. One of them was GDP, which they were looking to attain 3%.
And we're not getting that right now.
We're not even close. We're running, I would say, around 2.5%, and I think the Fed just lowered the projection for GDP growth to about 1.8 to 2%.
For the second quarter.
Yes,
Yeah.
but also if you look at the contraction in the first quarter, and I have a feeling third quarter will come in flat. I think the year end will end up around 2.5% below the initial targets. But to make the long story short, then you had the full labor employment. They were looking for the employment to attain about 5%.
We're not getting that at the moment.
Right now, it's 5.5%. In fact, it backed up from previous month, 5.4 to 5.5. But more importantly, if you look at something called labor force participation rate,
Number of people looking for a job.
which is 62.9%, just to give you perspective. Prior to 2008 Great Recession, that number was close to 67. So basically, a major component of that decline in unemployment was decline in the labor force participation rate.
And what that means is people discouraged by jobs and dropping out?
That is part of the explanation. No one ever alluded to the full explanation, but obviously part of the explanation is a high percentage of potential workers left the labor force. More importantly, there's 6.7 million Americans who work part-time because they cannot find a full, and that number was stuck for a while, which means that structurally the labor market could have changed quite a bit since 2008. There's another problem, something called U6, which is broader definition of unemployment.
What's it called again?
U6. The typical unemployment data we're looking at is U3. However, if you look at U6, that basically reflects unemployment close to 11%. Two different things.
Yeah, absolutely. And the quality of the jobs not looking so good.
Exactly.
As well. Let's talk about Greece for a moment. The central bank in Greece basically saying that we're looking at a doomsday scenario if the country defaults. And catastrophic, a crisis that they said could spin out of control. Do you think it's that serious? First, is the risk of a default now going up? And because they owe about, $1.5 billion by the end of this month.
That's to the IMF.
To the IMF. And they need to borrow that money from somewhere else to get it, right?
Or they need concession from the IMF.
So the first question is the risk of a default going up, meaning will somebody blink here? And second, will it be the doomsday scenario that the Greece bank says it could be?
Well, understand the following. If Greece defaults to IMF, let's just assume that, there's a risk to European Central Bank. Why? Because European Central Bank has provided more than 80 billion euro of liquidity to Greece. However, that was backed by Greek debt. If Greece defaults to IMF, what is the value of a Greek debt, which collateralized the liquidity or the loans that the central bank or European Central Bank had provided to Greece? So potentially, this could escalate across Europe. However, I don't see where is the U.S. exposure. Because if you look at the
U.S. exposure.
So I'm actually thinking the other way. U.S. could become the ultimate flight to quality simply because from the
rest of Europe falls apart.
Yes, because that has been a past historical trend.
Okay, walk me through this. What does a Grexit look like? If Greece defaults, does that automatically mean they're going to abandon the euro? And if they abandon the euro, then what happens?
No, evidently, if they default to IMF, there's a sequential process of notices from IMF, and someone had indicated that the process could take up to 2 years before Greece would be literally kicked out by IMF. European Union, it's another issue. I think if Greece defaults to IMF, therefore collateral deposited with ECB is worthless, so to speak, then I think Greece would be forced out of the EU. However, again, if Greece defaults on a euro debt, which is substantial, remember there's another 200 billion plus of debt outstanding, how can Greece convert into drachmas? Because in order to fund their needs, who's going to invest in that debt knowing that Greece defaulted?
And we have about 30 seconds left.
Absolutely.
Is that why there's about $30 billion of euros that have left Greece over the past year and a half?
That number has actually increased from December until our previous interview. It was about 30. I understand there was another 5 billion behind it. So potentially 40 billion euros had left Greek banking system.
Gabe Borenstein, thank you so much.
Thank you
for walking through this with us.
Thank you.
Good.